What's up, YouTube fam? Welcome back to the channel. So this is a topic that I feel like I've gotten a lot over the last couple weeks, so I want to cover it here, and that is the differences and the pros and cons of buying options versus selling options, because a lot of people don't seem to understand the differences, right? When I discuss maybe selling options, some people will say, oh, it's just degenerate gambling, or when I discuss just what I do, they're just very quick to assume that it's the same. Maybe they'll tell me a story of someone they know that lost a lot of money buying options. Maybe they'll talk about how it's a losing proposition, which buying options is a losing proposition, where selling options is very much a winning proposition. So I want to get into the differences here on this video and discuss them. Before I do that, I do want to mention that I posted a new Discord link on the bottom of this video. I know the old one was expired, so people have not been able to join for the last week or two, which, you know, it's been great. Obviously, the people in there have been active. I already feel like I'm one with the community. I love everyone in there, so I want to shout out everyone in there. And if you want to join, the link is on the description of this video. So without further ado, let's get into the differences, right? So when it comes to selling options, right, you are putting collateral up. Let's just write selling, and then I'll put things. So you're putting up collateral for shares, in exchange for premium, right? So really everything you do with selling is the opposite, and everything you do with buying is the opposite. So they're basically opposites of each other. That's why it's so funny when people think that you are buying options when you're selling, or vice versa. So I guess I'll just get into an example, right? Obviously, in this case, we could look at one of our open positions. Okay, so at this moment, we have this play on MSTX. Now, when you see the strike price, right, the strike is $58. So that means I'm putting up $5,800, right, because a options contract is 100 shares. So I'm putting up $5,800. In exchange, I'm collecting $227. Now, I get it, right? When you first hear that, you're probably like, who in their right mind would risk $5,800 in exchange for $227? Now, here's the thing. The only way you're risking $5,800 is if it goes to zero, because the way it works is if by January 3rd, right, the price is below 58, so obviously you see it's at 66, then I have to buy the 100 shares at $58. Regardless, I get the premium. So the premium is like my interest, right? So I'm loaning $5,800. In exchange, I'm collecting $2.27. That is selling options. Now, buying options, today's a great day to discuss this because it's Friday, so it's zero date, but we'll look at the SPY chart. So if I go to click trade options and I go buy and I go to say put, right? Because right now, well, I guess it is bouncing. So let's say buy call, right? You notice how it's so cheap. Now the good part is you don't need all that collateral. That is for the seller. So if I want to click buy, I can buy one contract, which gives me the right but not the obligation to own 100 shares at $5.93. So if I buy this call, right, I would be putting $143 in exchange for the right to buy at $5.93. So at that point, right, what I would want, since this expires today, I would want for it to end the day above $5.93 if I have any chance of this option, you know, going up in value. If it ends the day below $5.93, it is going to be worthless. So my $140 would be gone. So that's the good thing about buying options, right, is your only risk is the premium, where selling options, your risk is the 100 shares worth of value. So with selling options, you need to put up a lot of capital, right? If I go to click sell call, right, first I'd have to buy the shares. That's why we always start with selling puts, because you don't have to buy the shares. But notice how if I click to sell on this $5.92, then I would have to put up $59,000, right, in exchange to collect $110. So, you know, from the surface level looking in, when you go to buy an option, it seems like a better deal because it's like you're only risking $160. And of course, on a day like today where the option expires, you can very easily make, you know, 2x, 3x, 4x on your money. So I'm only risking 170. Worst case, I lose 170. Best case, you know, I turn it into 350, 520, etc. Obviously, you know, you can go further out, but I figure it's easier to just explain it since it expires today. And obviously, that's the other thing about buying options, right? Is so there's this whole option chain, right? There's what's called the Greeks, and I'm not going to start explaining them now. But when you buy options further out, right, the problem is, well, so this, we're deep in the money. So let's go closer. When you buy options further out, they're out of the money, right? The problem is this thing called theta. Basically, every day, the option will lose value. Now, the good part is when you sell the option, you want it to lose value. You want to see it losing value because that is how you make your money. So, right, if we go and look at my current position, right, the reason why it says that I'm down is because I got in at $2.27 and now it is worth $2.88. So I'm down the difference, right? That's the total return. So with buying options, again, it's the complete opposite. If I would have bought at 228 and it was worth 285, I'd be up this instead of being down this. So when it comes to selling options, right, your gains are capped because the only thing you can make is this premium. And again, from the surface level looking in, it looks like a terrible trade because you're putting up $5,800 worth of collateral to make $227, right? But from, the world of, I guess you can say math in the sense of like how often you win, it's a good trade because when you think about it like this, right? All right, I'm down this much on this position. I'm actually down a lot more when you consider the fact that I've rolled. But it's like, a majority of people who buy options, right, they would put 20,000 into an account and it would be gone. Obviously, in this case, it's been almost 2 months and we're still up $1,500. Now, that's coming with tons of turmoil, right? That's coming with, a huge retracement. A lot has happened, okay? And we're still up. When it comes to buying options, like I said, 90% of people who would have put 20K into a buying options account would have either lost all of it or been down money. So it's like when you do the math, when you actually work it out, it's like, listen, in the world of options trading, I will say this. If you buy options and you are, the greatest trader in the world, then yes, you can get much richer buying options and selling options. Selling options, it's more of I guess you can call it a rich person's game, right? Because you need the collateral. So exactly with SPY, it's $590 a share, 100 shares. You need 59,000 in collateral just to sell SPY options, where if you want to buy SPY options, you can literally do that with $100 today. Now, obviously, right, if we go and buy calls, and let's just say you have more money and you buy 10 contracts, then yeah, you can do it with 1,400, and hypothetically, yes, flip that into 3,000 in today. Now, obviously, this is tough price action to be buying calls. The market is down. This is a tough position to buy calls or puts, right? Because ultimately, it's gone down a lot. So, you want to believe it's going to follow the trend, but it also looks like it could be bouncing. So, like in a moment like this, you'd really want to wait, right, to see who's going to take control. It's like, are we going to continue down, right, break this, and then retrace, right, do this, and then go down more? Or is it going to do something like this and go higher? Now, that's the reason why I don't like buying options, is because all of that prediction, right, you combine that with the fact that you're racing against time, you're racing against the decay of the option, and it really does become a losing proposition. It's like, even if you bought puts, right, and you wrote it down here, and then the moment it starts accelerating back up, even if it's way below your entry and you should still be in profit, you're actually going to be down money because of the way the Greeks work with acceleration. Now, again, it's important because everything that goes against an option buyer goes for an option seller. So, part of what made me so invested in option selling is the fact that I tried option buying for so long. I bought options for a year straight, trading basically every single day, whether it was random names or just zero date on SPY, zero date on the Qs. I was in there trading options and buying them every day and just witnessing, almost every time I would take it, it would just lose value, even if I was right on the direction, right? Because even if you're right on the direction, you're still going up against time, which is what makes it so difficult. When you're selling options, you're going with time. So it's like, these positions that I'm down on, if we go and look at the chart, and as you see now it's breaking down, the NASDAQ has been falling off a cliff, right? We go and look at crypto. Bitcoin has been absolutely falling off a cliff, and it's like when you look at this daily, yeah, it does not look pretty, right? When you go look at the stocks I'm in, they're all down tremendously, 5% today, 5% today, probably down way more over the week, right? It's like, I've been in this position since it was, this stock is down 30% since I've opened up this option sell. So, my account is down, I mean, we're up 7%. At the high, we were up like 26%. So my account is down like 15, 20%. So it's still beating the, the stocks that I'm in. And that's the beautiful part about selling options, right? Is there's all these techniques you can roll. Since you're selling puts, your strike is below where it's at when you open the position. So there's a lot of things about selling that make it a winning proposition. I think the only argument against selling is the fact that you have capped gains, right? So it's like, I can only make $227 on this trade. And again, I'm risking $5,800 to do so, where buying is like, again, it's the complete opposite. If we want to look at, let's just say MSTX, right? Let's just say a 0 date. So let's pull up another option. Let's go to buy. Let's go to click put. We're going to scroll. So how about this? We're going to do the exact one that we sold, right? Now, it won't let me just buy this put because since I'm in a sell put, it would actually close it. But hypothetically, if I wanted to buy it, I could actually buy it for $285. So the exact put that I sold that cost $5,800, I could buy that put for $280. Now, again, that's where buying seems like a better deal, right? It seems like a better deal because instead of having to put $5,000 for collateral, I'm only putting up $280. So it's like the big difference, right, is with selling, you're putting up the collateral in shares. With buying, you're putting up the premium, right? So it's like one person puts up the shares, the other person puts up the premium, and it's like, eventually you might have to trade the two, right? Like eventually I might have to buy the shares for the premium, or for instance, he might have to buy the shares for the premium. So that can always happen. Now, a lot of people forget all that, right? They just think about flipping premiums and making money and becoming rich. And yes, if you buy options and you are, an incredible trader, you can definitely get very wealthy, right? You see how this put has already gone up from 280 to 310. So if we would have put $280 in a minute ago, and now look, obviously this is a little tough because of the spread, right? From 245 to 350, right? I wouldn't necessarily want to buy options on something like this because of how crazy the spread is. But the point is like, the main difference is one of them, you don't need as much money, right? One of them, you're putting up a couple $100, but your chances of losing are so high, where, the other one, you're putting up thousands and thousands of dollars, but your chances of winning are so high. So, right now it is, look at this. It has a 71% chance of profit if I wanted to sell this put, which I already have, right? So that means this option chain is telling me that by Friday, next Friday, there's a 71% chance my position will be in profit. Obviously right now it isn't, but that's the cool part, right? Is like, even though this has gone down so much since I've gotten in, if it just hovers over 58, this option is going to naturally lose value. And that's why buying options is ultimately a losing proposition, because unless it goes down fast and gets below your strike, it's losing value every second. It's like life. It's like a big hourglass, right? Like you're just losing, you're decaying every single second. You're deteriorating every single second, where again, if you sold that option, you are profiting off that. So the only reason why we're having a little bit of a rough week here, or whatever it's been, a rough couple weeks, is because of the fact that the market's been just going down so fast the last 2 weeks. Now, when you look at something like the S&P 500 or the NASDAQ, it's like this price action, it does happen often, but it's not, the reality, okay? Like, yes, we get these, like these big dumps, they happen very often, and it's mostly to shake out people who are scared, right? Paper hands, to shake out 0 date option buyers, to shake out high leverage, to shake out people that aren't truly convinced in the asset they're holding. But the reality is it does tend to only go up, right? And you can zoom out as much as you possibly can. All right, and this isn't a good chart because it only goes back to 2017. Obviously, the NASDAQ's been around much longer than that. But the point is, it's like you can't let these types of days scare you. So for me, my account is still in the green. Even if my account did go red for a little bit, I still wouldn't be worried because I have so much confidence in the positions I'm in. I have so much confidence in the strategy I'm in. But that's kind of the point, right? Is like, I built it up for a month. It only took a week or two to bring it down. But, and I've discussed it on this channel time and time again. There's so many ways where I could recover so fast. Obviously, this Con-L position, we're still far from the expiration date. So it's like I'm not even really paying much mind to it. This one, we're still above my strike price, so I'm really not even stressing about it. And again, even if this one expires below and this one expires below, In a lot of ways, that's the best thing that can happen to you because, when you're selling a put, you're putting your entry way below the price of where it is at the moment, right? When I entered this MSTX position, it was a couple days ago now, and MSTX was at, $75. So it's like, even if I had to buy at 58, that's still much better than buying at 75. And it's the same thing with Connell. When I first took this position, it was at $60. So it's came down so much since then, yet I'm still very much alive. I'm still very happy with what I've done. And if it keeps going down, I'll roll another $5 and another $5. So it's like eventually, hypothetically, like I said, and I've said this multiple times on this channel, it's like if it gets all the way down here and I'm able to roll all the way to here or here, it ends up being a good entry as opposed to, again, if you just bought and, you had to ride all those losses. Now, the difference is if you would have bought options here, right? Like if you would have bought calls up here. So listen, I'll admit this. If you would have bought puts here, okay, you'd be doing really well for yourself. But, if we're being honest, guys, like who is really making money as bears? The majority of the best traders you've ever met, you've ever heard of are all bulls. Guys like Warren Buffett. So it's like, buying puts, it's just not a game that I like to play. I've done it, right? I've shorted the market a million times, truthfully. And I'll be honest, a lot of my worst stories trading have come from shorting. Have I caught candles like these and made tons of money in the moment? Yes. But over the long run, I've lost my shirt trying to short the market, and I'm just not really interested in that anymore. I'd rather do something like this because I can roll down, which allows me to continue buying the dip and then catch the gains to the upside. To me, I've made the most money I've ever made being a long, being a bull, and I've lost more money than I've ever made trying to short. So for me, buying options, trying to decide, should I buy puts, should I buy calls, is not worth it. What I'd rather do is sell puts because then I'm either going to buy at a lower price or it's going to go up and I'm just going to collect the premium from the put losing value. So, I know I started this video writing pros and cons and differences, but I guess the ultimate pro and con is like with buying options, you can make a lot from a little, but the con is you're very likely to lose whatever money you put in. And with selling options, you'll make a little from a lot, but which is the con, but the pro is like you're likely to win every single trade you take, especially, if you do it my way, which is, you're looking to put strikes at lows or below lows, but it's like you can literally read the option chain. So without even knowing anything, you can literally enter a trade where you have a 72, 75% chance of winning. And then when you combine other factors, whether it's economics, whether it's, technical analysis, you increase your chances of winning even higher. So ultimately, to say which game is better, it obviously depends on who you are as a person. Because listen, I know people, or at least people that claim to be making tons of money buying options. I don't know anyone personally. I guess, like I said, people that I'm maybe friendly with from social media that claim it. I'm not going to sit here and deny their claims or argue their claims. I just know that I've tried buying options for a long time. Tons of people have tried it. A lot of times it really does come across as degenerate gambling. Of course, if you are a successful options trader buying options, I'm not here to, call you out or say that you're full of baloney. But I will say that for 90% of people, you're going to be much better off trying to sell options because, it's just the difference of making money and losing money. Like most people who buy options lose their money. I can tell you that I've funded options accounts with 10K, 20K, lost all of it. This, on the other hand, something like this, I just don't see a world where I lose all of it because the only way you can lose all of it is if the stock you buy goes to zero. And, listen, it could happen. I'm not going to say it's impossible, but do I see it happening? No. Am I trying to stick to assets that I know a lot about and truly believe in? Yes. And I'm trying to be quick with it, right? Like in this case, for these plays, I've been in them for a while, Connell specifically. But Coinbase is something I'm not afraid to be in for a long time. So it's like if you're going to sell options and you're chasing big premiums, know the difference between something you're okay with being in for a long time and aren't okay with. Obviously, with these MSTX and Connell, it's just leveraged versions of Coinbase and MicroStrategy, which means they can go down a lot faster, as if these aren't volatile assets enough, right? It's like when you look at Coinbase, it's down 3%, Connell 6%, MSTR down 2.9%, MSTX 6.5%. So it moves 2x the rate of stocks that are already extremely volatile as it is. But that doesn't make me afraid, right? That doesn't make me fear it. And ultimately, if this ship is going to go down, I have to go down with it. Listen, like I said, the beautiful part about selling an option is you get to keep rolling. So it's like, even if you go down with the sinking ship, there's so many ways to save your money and ultimately turn a loss into a win, even if it takes a while. But with buying options, chances are, if you're wrong, then your money will be gone and you will never get it back. Listen, you can get it back, but it'll be from something else, right? Maybe your job, your next paycheck, things of that route. So I hope you guys got a good understanding of the difference, because a lot of people don't seem to know the difference. They hear options and they just assume, things they've heard, things they've been told. But that is, the simplest way I can describe it. If you guys want, feel free to comment your thoughts, comment maybe some differences you have. Make sure to like this video, make sure to subscribe to the channel, and I'm putting a link on the bottom for the Discord. So if you want to be a part of the community, we have tons of great stuff in there, tons of great people, just talking about the markets, selling options, everything you can think of. So if you want to be a part of that, make sure to check it out, and I'll see you guys in the next video.